Are you a forex trader, crypto trader, stock trader? But you wake up in the morning getting confused, you don't know what to do because you don't know what the market is doing. You feel like, okay, these are just some random candles going up and down, going sideways. I don't know what to do. But let me just tell you, the fact about this thing is you are in the wrong side of the market. You are looking at the wrong thing, the wrong time. Good morning, good afternoon, good evening, depending on the country you are from and depending on the time you are saying this. This is Flex ZD and welcome back to another episode. On this episode, we are going to be talking about market structure. Market structure is the crucial and the most important part of trade. I know we have different techniques. We have the ICT, we have the SMC, we have the SNR, we have the alchemist, we have lots of techniques out there that are trying to prove that, okay, fine, this is actually better than this. But trust me, all techniques uses market structure. All techniques uses market structure. Just that, okay, all these techniques might be looking at a different angle, maybe at a different reference point. Hope you're understanding me. So now, like this, when you wake up in the morning, or it doesn't really matter morning because I don't really do my analysis every day. You get, I just have points of interest. You get, so whenever you want to do your analysis, what you have to do is trend. You check the trend. You wake up. First of all, you go to your big boy time frame. For me, my big boy time frame is the 4-hour time frame. I will go to the 4-hour time frame. After going to the 4-hour time frame, I will look at this 4-hour. What is this 4-hour doing? This 4-hour is actually trending. No, this 4-hour is ranging. If this 4-hour is trending now, this is my big boy time frame. Do you know what I will do next? I will also go to daily time frame. At the daily time frame, I will also check, okay, fine, what is daily time frame doing? Daily time frame is trending and the same trend as the 4-hour time frame. Let's say both time frames are both bullish. Then I will be like, okay, fine, then this is a good start for me. Let me just go to like a lower time frame. Then this is where I will now go to my 1-hour time frame. You get, what I will do in my 1-hour time frame is to spot key reference points. Okay, key reference point like order block, breaker block, fair value gaps, liquidity zones, and all. Hope you're understanding me. Okay. After doing all of this, for example, now this is my analysis on GPP USD, and I'm actually waiting patiently for price to get into this zone and I will buy. I don't really matter, like it doesn't really matter even if I make a loss. But the reason why I also have this zone behind me is if this zone gets broken, so that means that this serves an inducement, then I suspect and I expect this zone to hold. Okay, so now let me take you step by step to how I do this my analysis. Yeah, because I'm actually waiting for price to tap into this zone and I will just go boom. You get, so now let's get going. First of all, I told you 4-hour time frame. So what is this? This is a clear structure that the 4-hour time frame is bullish. Okay, so and the trend is your friend. You only want to be doing what the trend is doing. Okay, then what's next? Then I go to my daily time frame. Just look at something. I go to my daily time frame. This daily time frame is also bullish. You understand? You get? It's also bullish. Then sometimes I go to weekly time frame too. Okay. Okay, you see? Actually, the reason why I do this, the reason why I go to weekly and daily time frame is for me to be able to identify key levels, key points where I am expecting possible reversals. As you can see now, in this weekly time frame now, what's here? This is an order block. You get, there is nothing you go and tell me in this life that if price should get to that key level there, trust me, is definitely going to give a structure for reversal. You get, that's the reason why I have that point there. You get, so now like this, we are bullish from this point to this point because of what? Markets want to actually take this price to this level. I hope you're understanding. Like it want to take price action to this level. You understand? Yeah, to that level, then which is fine. Then I go back, having known this, then I come back to my 1 hour time frame and see. Note, 4 hour is bullish, daily is bullish, and weekly is bullish. Then no wahala. Then I go back to my 1 hour time frame. Sorry, the network is lagging. So this is my 1 hour time frame. So what I do in this my 1 hour time frame here is I look for key reference points. I look for key reference point. When I mean key reference point at the order block, yeah, at the breaker block, at the fair value gaps. Okay. So look at this. This is a POI I drill, but I'm not going to explain that because this is my current POI. I'm going to just show you how I just do this, maybe in a jiffy, like in 1 minute. So now like this, I just come to this chart and this is my recent price action, like my current market price. And you should know that if you want to have a setup, you're actually drawing levels and set up from a current market price. So now like this zone here, this zone here is my current market price. All right. Okay, since this is my current market price, now what I'm supposed to do now is I will see, what do I have any other block? Do I have any break of structure? Do I have any liquidity? Are you understanding? Do I have any liquidity and anything that is supposed to serve as my key reference point? And I will say, okay, fine. Since we are bearish here and this place here, we have an obvious, like very, very obvious break of structure. That is one. Then I will now draw this is my swing high. This is my swing high actually. This is my swing high. And this is my sweep, liquidity sweep. This is my liquidity sweep. And you can see break of structure, liquidity sweep. Then my structural liquidity, that is the last low before the main low. My structural liquidity, this is it. Okay, then what? I will be expecting my take profit around this place. All right, my take profit will be around this place. And here's come my point of interest now. So where am I expecting to buy from? That is the problem. I can't see any other block, any breaker block around this zone. What I usually use is the word QMR. QMR stands for Quasimodo reversal. Yeah, so this will serve as my QMR. This small red candle here, I will now draw it to this place. I will now draw it to this place because I'm actually expecting a reversal from there. Or I can just pick this complete zone. Yeah, I can just pick this complete zone here like this, and here this will serve as my POI, that is point of interest. Then boom, I'll just put it here. This is my, and my stop loss will be, I'll just try to make this protected. As you can see, this is just 4.64 RR, and I'm actually waiting patiently for price to tap me into this zone, and after everything I will come with the result. Even either is positive, either is negative. So I will see you in the next episode. Sorry, make sure you catch up with Flexi DNA on your next episode of Advanced Forex class. So thank you.